happen today, the first trading day for the month of June, June 1st, Monday. So we're getting ready to trade Tuesday, June 2nd. Here's our weekly chart, and as you can see, we're starting off with a red weekly candle, meaning that we closed today lower than we opened. And since it's the start of the week, that's what the weekly candle looks like. Let's take a look at the 5-minute chart. You can see that we opened and we made this catastrophic move right off of the open all the way up to 42.34. Now, mind you, our current all-time high is 42.38. So this is really, this was really an effort to try and make a new all-time high, but it was met by sellers. And as you can see, we got slammed all the way down to a low of the day at around 41.97 and change. Since it's the beginning of a new month, you can be dramatic here and say this is the current June low, and our high today is the current June high. So that's kind of some good things that you can do as we start off a new month, is you can start making some new statistics to watch out for, and to try and beat and hold, and so on and so forth. This was a blast over last week's high, which had been set on Friday at 42.18, and it almost foiled that head and shoulders pattern. We didn't quite make a new all-time high, but I really don't think that this sell-off is meaningful in any way. This is probably going to be foiled, and we're probably going to burst out to a new all-time high. I would be buying calls, not buying puts. The reason being is that until we sell off down below and start breaking the 10 and 20-day simple moving averages all the way down, I'd say the 10-day is going to be around 41.79 on Wednesday. And the 20-day, I have it shifted over to the left here because it's starting to interfere with this gap support level at the 524 low. That's going to be around 69.50 or so. So until we break, if we come in tomorrow and break today's low, and sell off down to the 10-day and break the 10-day and break the 20-day, then I would be bearish, most definitely. And you could certainly play this down to these levels if we come in and break today's low, set a new June low, and sell off down to these. But if we hold at the 10-day or the 20-day, you need to be getting out of those puts and flipping long, because this could be a really swift turn that the market could make here at the 10 and 20-day simple moving averages. Looking at our roadmap, you can see we've got like 3 red candles in a row. We are just itching for a breakout here. And you can see how close we were to getting a new all-time high. It was basically taking a look above the all-time closing high and weekly all-time closing high. That's still the same level, 42.3260. So our high was a look above that and failed today. So it's pretty simple here. Either we come in and we trade up and over Monday's high and make a new all-time high and continue on with our paces as we've been talking about, 42.44, and then following the option strikes, as this note tells you, all the way up to the median line and the measured move targets. Or we come in and maybe we have an inside day, since this was quite a big range that was traded from 42.34 all the way down to 41.97 and change. Pretty big range. We could just trade an inside day. And if it's another red candle, I would say the bears are really asking for it, because if that was 3 green candles in a row, you would most certainly be looking to buy some puts tomorrow, right? But instead it's 3 red candles. I would certainly be looking to buy calls if I was trading this market tomorrow. And as long as we don't break down here below the 10 and the 20-day, I don't see any reason to really be too heavily short. Okay, and then let's take one final look here at our simplified daily chart. Our median line now rising to 43.79 or so on Wednesday, and the bottom of the fork at 40.82. I've been marking this level now on the roadmap where the bottom of that fork is, because it's starting to get pretty high. If we were to sell off down here, I mean, that wouldn't be any sort of test of these lows that were made in May. This would have to hold well above those in order to hold that fork. And as long as that fork holds, we still go for the median line. But if that fork were to break on the bottom, then we've got a different story. I know I'm talking about something bearish. I would still stick to a bullish flavor for this market as long as we are trading above the 10 and the 20-day. And look at this bull cross that's going on below us. Whatever was going on today was probably leftover Monday OPEX stuff from some short bets going into the long holiday weekend or something. I would not be surprised at all to see a gap up and go on Tuesday. And if it doesn't happen on Tuesday after an inside day, Wednesday after an inside day on Wednesday, then I bet you we're going to do one of those Thursday, Friday, like rip your face off rallies, 2-day rallies where we trade up to a new all-time high. That would be my guess. And like we said here, if we are going to go for our median line. It's all the way up at 43.79 now, so there is a long way to go before we would run out of steam and hit our median line, which all of our highs going back, you know, I can roll the chart sideways here, all of our highs going all the way back, and I'd have to, like, you know, recrop the chart here, but trust me, this median line has been touched and recoiled back from going all the way back to November. Okay, that's it. I hope this video helped you out and gave you at least some idea of what's going on. Have a great rest of your evening. As always, good luck and good trading.